Hey guys, Mr. Financial here, and in today's video, I'll share our TFSA income for the month of April, as well as some notable dividend raises. Let's do this! Before we dive into our dividend income for the month, let's have a peek at our portfolio's dividend calendar. January, April, July, and October are the big dividend months. February, May, August, and November are only monthly payers right now. And March, June, September, December are about half of what the big months are. In April, we received dividends from Canoe EIT Income Fund, VFV, Goeasy Ltd, Toronto Dominion Bank, Smart Sellers Real Estate Investment Trust, RioCan Real Estate Investment Trust, First National Financial, MCAN Financial, Fiera Capital Corp, Capital Power Corp, Telus Corp, BCE Inc, TC Energy Corp, and Bank of Nova Scotia. 14 stocks in total. That was a mouthful. As usual, we'll go through each dividend we received, adding up our totals along the way, starting with the smallest payer in relation to our total dividend income, and not just the size of the dividend itself. Our smallest payer was VFV, Vanguard's non-hedged S&P 500 index ETF. It paid us 70 cents, which is also the smallest paycheck. VFV provides us with 0% of our annual dividend income. This S&P 500 ETF has grown its dividend 50% since March 2018. Impressive. Our second smallest payer was Goeasy Ltd. It paid us $4.68. Goeasy provides us with 0.2% of our annual TFSA income. At a full position, we should see more than 10x of that. With a 5-year CAGR on its dividend of 33.7%, Goeasy's yield just keeps on going up faster than its skyrocketing share price does, with a CAGR of 29.4% over the last 5 years. After our first 2 paychecks, we're at $5.38. We can go buy Starbucks now. Our third paycheck was $55.30 from Toronto Dominion Bank. It provides us with 2.4% of our annual dividend income. This is a solid dividend growth stock with a chowder score of 13 and a 13-year dividend growth streak. Like many financial stocks, it has suffered the last 2 years. This can be seen in its last dividend increase of only 6.3%. After 3 paychecks, we're at $60.68. Next, we're paid $23.40 from MCAN Financial. That's our first dividend we received from them. It provides us with 2.9% of our annual dividend income at current share count. Remember, this is an MIC, so its dividend is reported on a T5 as dividend interest. That's why we hold it in our registered account. MCAN has a great chowder score of 15.3, and it's raised its dividend 3 years in a row now, and 8 in the last 10 years. I've liked MCAN for a while as a dividend growth MIC. After this paycheck, we're at $84.08. Next, we received $23, like every other month, from Canoe EIT Income Fund. It provides us with 3% of our yearly dividend income. It continues to pay out a regular 10-cent distribution month in and month out. There's not much to say about this Canadian favorite. After 5 paychecks, we hit 3 digits at $107.08. Our 6th dividend payment was from Fiera Capital Corp. It paid us $113.95 in April and represents 4.9% of our annual dividend income. This is one of 2 stocks we own that has no dividend growth streak. Looking at that payout ratio, yield, and total return, you can understand why we want to drop this. In the meantime, we'll continue to collect these dividends. This paycheck brought us to $221.03. Next, our bond-like stock, BCE Inc, paid us a dividend of $128.89. This gives it a weighting of 5.6% of our yearly dividend income. BCE Inc has a chowder score of 13.9, which is great, but it's only because of its current massive yield. Too bad it has massive debt to match that massive yield. At the halfway point, we are at $349.92. Our other telecom, Telus, paid us slightly more at $132.71. It provides us with 5.8% of our yearly dividend income. Telus has a similar chowder score to BCE Inc. at 13.5. This is because it has a great 5-year CAGR on its dividend of 6.7% to go with that bloated yield right now. This brings us to $482.63. Next, Bank of Nova Scotia paid us a dividend of $177.02. This gives it a weighting of 7.6% of our yearly dividend income. Bank of Nova Scotia has been slow on the dividend growth front, with its last raise only 2.9% and a 5% 5-year CAGR. I'm curious to see if they'll be able to raise it this year and keep their 2-year-long streak going. After this paycheck, we're at $659.65. For our 5th largest payer, we have TC Energy Corp. It paid us $177.59. TRP provides us with about 7.7% of our annual dividend income. It currently has a chowder score of 14, mainly because of its high yield. I expect its dividend growth rate to stay in the range of 3 to 5% moving forward, as was mentioned at last year's Investor Day. After 10 paychecks, we are at $837.24. Next, we have one of our monthly payers, SmartCentres Real Estate Investment Trust. We receive $59.58 in distributions. It provides us with 7.7% of our annual dividend income, just slightly more than TC Energy Corp and Bank of Nova Scotia. SmartCentres is the other stock we own that doesn't have a dividend growth streak going, and with the current real estate situation, nothing in the near future. Their last distribution increase was in 2019. With this paycheck, we're at $896.82. For our 3rd largest payer, we have one of our monthly financial stocks, First National Financial. We receive $66.98 in dividends. It provides us with 8.6% of our annual dividend income. First National Financial raised its dividend only 2.1% last year, but paid a 75-cent special dividend at the end of the year. With its solid financial results at the end of the month, I am hoping for their dividend to continue to grow at their 5-year CAGR of 5.3%. After this paycheck, we're at $963.80. Our last monthly payer is RioCan Real Estate Investment Trust. It paid us a distribution of $70.03, providing 9% of our yearly dividend income. Despite raising its dividend 3 years in a row, it still has a negative 5-year CAGR on its dividend. I'll be looking for insight into its growth potential in its Q1 report. After this second to last paycheck, we are at $1,033.83. And our new largest dividend payer is Capital Power Corp. It paid us $329.93 in dividends. That represents 14.4% of our annual dividend income. Capital Power Corp has been raising its dividends at a 5-year CAGR of 6.7%, which is quite impressive for a utility. This position is big enough to start to organically snowball. So after all 14 paychecks, our grand total is $1,363.76. We haven't received this many dividends in our TFSA since we sold off a third of our portfolio back in September of 2022. Check out this video if you're curious why we did so. Compared to April of 2023, our dividend income grew 32% this year, in part because of Fiera's dividend moving from March to April. Anyway, our 3 largest dividend payments accounted for $684.54, or 50% of our dividend income for the month of April. We are building our portfolio with a focus on the quality of the company and dividend growth potential. We aim for a chowder score of at least 12 with our dividend growth stocks. However, we never want to be too dependent on any one stock in the event of a dividend cut during economic turmoil. So, we don't hold a concentrated portfolio. As you can see from our portfolio breakdown, no one industry or stock dominates our dividend income. Our portfolio reveal video last week showed the breakdown of our portfolio by industry, if you want to check that out. Now, a massive part of our dividend income growth is the dividend raises we receive. So far, we've received 9 dividend increases at an average increase of 7.5%. Not bad. In the month of April, we received no dividend increases in our TFSA accounts. However, there are some notable dividend increases that happened, and hopefully they happened to you. Dollarama Inc. upped its dividend 28%. Nasdaq Inc. upped its dividend by 9.1%. PepsiCo upped its dividend 7.1%. Packer upped its dividend 11%. Also, we had some tech companies initiate a quarterly dividend. Meta now pays 50 cents a quarter. That translates to a 0.5% yield. Google now pays 20 cents a quarter, also a 0.5% yield. I anticipate more tech companies returning free cash flow to shareholders in the form of dividends and buybacks, especially in the current market condition. Our forward annual dividend income is sitting at $9,344 with a yield on cost of 7.82%. We still have $50,000 to deploy in our TFSA this year. As we get closer to maxing it out again, we expect our dividend income to snowball faster and faster until retirement. I can't wait. Thank you so much for all your support on the channel. Alla prossima! Until next time.